Hello everyone, I am Renier Bajala. I am going to present to you the Presidential Decree number 612 as amended by Republic Act number 10607 or the Insurance Code of the Philippines. The short title of this law is the Insurance Code of the Philippines. The long title I get from the amended Republic Act 10607. It is an act strengthening the insurance industry, further amending Presidential Decree number 612, otherwise known as the Insurance Code, as amended by Presidential Decree numbers 1141, 1280, 1455, 1460, 1814, and 1981, and Batas Pambansa bilang 874, and for other purposes. Just a brief history of insurance in the Philippines. In the pre-Spanish era, there was no insurance, and insurance in its present concept was introduced in the Philippines when Lloyd's of London appointed Strachan, Murray and Co. Incorporated as its representative here. And in 1898 is the arrival of Sun Life Assurance of Canada, and it is the first life insurance, international life insurance in the Philippines. In 1906, the first domestic non-life insurance company, the Yek Tong Lin Insurance Company, was organized. It is a Hong Kong-based insurance. In 1910, the first domestic life insurance, which is first local insurance in the Philippines, is the Insurer Life Assurance Co. was organized. In 1939, Union Insurance Society of Canton appointed Russell and Sergis as its agent in Manila. The business transacted in the Philippines was then limited to non-life insurance. So here during this era, there are only non-life insurances in the Philippines, and life insurances are not yet emerging here in the Philippines. In 1936, that's when the government service insurance system was created, in which it is a social insurance and that established with the enactment of Commonwealth Act number 186. The act covers government employees. In 1949, government agency was formed to handle insurance affairs where the insular treasurer was appointed commissioner ex officio. In 1950, reinsurance was introduced by the Reinsurance Company of the Orient when it wrote treaties for both life and non-life. And in 1951, first workmen's compensation pool was organized by the Royal Group Incorporated. In 1954, RA 1161 was enacted, which provided organization of the Social Security System, or the SSS, covering employees of the private sector. And in 1974, Presidential Decree 612 was promulgated, and this is the current Insurance Code of the Philippines, ordaining and instituting the Insurance Code of the Philippines, thereby repealing Act 2427, Presidential Decree 63, 123, and 317 were issued, amending Presidential Decree 612. On December 18, 1974, Presidential Decree 612 was promulgated and ordaining and instituting the Insurance Code of the Philippines, and provided the Office of the Insurance Commissioner be renamed as the Insurance Commission. Finally, on June 11, 1976, Presidential Decree 1460 took effect and consolidated all insurance law into a single code, resulting that we know now as the Insurance Code of 1978. So this is the page of the Insurance Commission. Insurance Commission is the one who regulates the insurance in the Philippines. Insurance is a contract. As we know in law, there is contract in which there is an agreement or meeting of the minds. A contract of insurance is an agreement whereby one undertakes for a consideration to indemnify another against loss, damage, or liability arising from an unknown or contingent event. Whenever a contingent event arises, one will undertake for consideration of another's loss due to sudden contingent event. What may be insured? Any contingent or unknown event whether past or future, which may indemnify a person having an insurable interest or create a liability against him, may be insured against, subject to this provision of this chapter. The consent of the spouse is not necessary for the validity of an insurance policy taken out by a married person on his or her life or that of his or her children. All rights, title, and interest in the policy of insurance taken out by an original owner on the life or health of the person insured shall automatically vest in the latter upon the death of the original owner, unless otherwise provided for in the policy. What are the elements of an insurance contract? Like any other contract, an insurance contract must have consent of the parties. So, the insurance contract is a consensual contract. Object and cause or consideration. The parties who give their consent in this contract are the insurer and insured. So the parties, which are the insurer and also the insured, should give consent to the giving parties. The object of the contract is the transferring or distributing of the risk of loss, damage, liability, or disability from the insured to the insurer. The cost of consideration of the contract is the premium which is the insured pays the insurer. How are insurance contracts classified? There are three classifications I listed here. The first is life insurance contracts. It includes individual uh, insurance, group life insurance, and industrial life insurance. For the non-life insurance contracts, there are marine insurance, fire insurance, casualty insurance, and the third is contracts of suretyship and bonding. So doing an insurance business, first making or proposing to make as insurer any insurance contract. Making or proposing to make a surety any contract of suretyship as a vocation and not as merely incidental to any other legitimate business or activity of the surety. Doing any kind of business including a reinsurance business, specifically recognized as constituting the doing of an insurance business within the meaning of this code. Doing or proposing to do any business in substance equivalent to any of the foregoing in a manner designed to evade the provisions of this code. Parties to the contract. Every corporation, partnership, or association duly authorized to transact insurance business, as elsewhere provided in this code, may be an insurer. Anyone except a public enemy may be insured. Let's talk about insurable interest. Every person has an insurable interest in the life and health of himself, of his spouse, and of his children. So basically, you have insurable interest to your family member, maybe your child, your spouse, your wife, and of any person of whom he depends wholly or in part for education or support, or in whom he has pecuniary interest. Of any person under a legal obligation to him for the payment of money or respecting property or services of which death or illness might delay or prevent the performance, and of any person upon whose life any estate or interest vested in him depends. An insurable interest in property may consist in an existing interest, an interest founded on an existing interest, or an expectancy coupled with an existing interest in that out of which the expectancy arises. Concealment. It is an important provision of this law. It is a neglect to communicate that which a party knows and ought to communicate is called a concealment. A concealment, whether intentional or unintentional, entitles the insured party to rescind a contract of insurance. It is important that in insurance, the agent must communicate well the information of the agreement to the insured and to the policy owner so that he will understand well the policy, and that if he is entitled to be insured because of the Concealment, intentional or unintentional, so he has the right to rescind the contract. Representation. A representation may be oral or written. A representation may be made at the time of or before issuance of the policy. The language of a representation is to be interpreted by the same rules as the language of contracts in general. Policy, the written instrument in which a contract of insurance is set forth, is called the policy of insurance. It is the written document that you receive once you get insured. The policy shall be in printed form, which may contain blank spaces, and any word, phrase, clause, mark, sign, symbol, signature, number, or word necessary to complete the contract of insurance shall be written on the blank spaces provided therein. A policy of insurance must specify the parties between whom the contract is made. Of course, the parties of the contract is the insurer and the insured. The amount to be insured, except in the cases of open or running policies, the premium, or if the insurance is of a character where the exact premium is only determinable upon the termination of the contract, a statement of the basis and rates upon which the final premium is to be determined. So the premium may be monthly, quarterly, biannual, or annual. The property or life insured, the interest of the insured in property insured if he is not the absolute owner thereof, the risks insured against, and the period during which the insurance is to continue. Warranty. A warranty in an insurance policy is a statement attesting that something the insured person says is true. An insurance contract is written on the principle of utmost good faith, meaning each party must trust that the other is being completely truthful. A warranty is either expressed or implied. A warranty may relate to the past, the present, the future, or to any or all of these. No particular form of words is necessary to create a warranty. Premium. An insurer is entitled to payment of the premium as soon as the thing is insured, is exposed to the peril insured against. Notwithstanding any agreement to the contrary, no policy or contract of insurance issued by an insurance company is valid and binding unless and until the premium thereof has been paid, except in the case of a life or an industrial life policy whenever the grace period provision applies, or whenever under the broker and agency agreements which duly licensed intermediaries a 90-day credit extension is given. No credit extension to a duly licensed intermediary should exceed 90 days from date of insurance. In RA 10607, or in the Insurance Code of the Philippines, there listed the types of insurance. The marine insurance is against loss or damage to vessels, craft, aircraft, vehicles, goods, freights, cargoes, and merchandise. Fire insurance is against loss by fire, lightning, windstorm, tornado, or earthquake, and other allied risks, when such risks are covered by extension to fire insurance policies or under separate policies. Casualty insurance is insurance covering loss or liability arising from accident or mishap, excluding certain heights of loss which by law or custom are considered as falling exclusively within the scope of other types of insurance such as fire or marine. Suretyship is an agreement whereby a party called the surety guarantees the performance by another party called the principal or obligor of an obligation or undertaking in favor of a third party called the obligee. The life insurance is insurance on human lives and insurance appertaining thereto or connected therewith. An insurance upon life may be made payable on the death of the person or on his surviving a specified period or otherwise contingently on the continuance or cessation of life. Life insurance is the most common type of insurance. Microinsurance is a financial product or service that meets the risk protection needs for the poor. Health insurance lets you cover your immediate family at an additional price so that you can also pay less on their checkups or in case they get hospitalized. One example of this is the HMO, wherein you will get discounted or free when you are hospitalized or when you get checkups. Educational insurance lets you save money in advance and you can cash out for tuition payments or school allowance and education benefits. Vehicle and accident insurance is when your car gets damaged or you or your family members riding the vehicle gets in an accident, you can get back the maximum amount insured versus your expenses. And this vehicle and accident insurance also comes with CPTL or compulsory third-party liability, in which it helps you in case you hit someone by accident or a passenger who is a friend or co-worker of the driver got injured, then you can get claims for their expenses. A type of insurance, one example of insurance company that sells this type of insurance uh, is Stronghold in Cagayan de Oro and any other. Property insurance is in case of accidents like fire, theft, earthquake, floods, and many more. If your area is prone to fire or flood, then it is better if you own this so that if such happens, you don't start from scratch. It covers the house and what is inside. And lastly, the travel insurance. In case something you do not like or did not expect happens in your travels and plans, it covers you in case you will lose your baggage, you'll have delays, or you get in an accident. I gathered two cases which involve in this law. The first one case is the Del Rosario versus the Equitable Insurance, uh, 118 Bill 349. And the facts of this case is that Equitable Insurance issued a life insurance policy to Del Rosario, binding itself to pay 1,000 to 3,000 as indemnity. So here, the Equitable Insurance, as the insurer, promised to pay Del Rosario 1,000 to 3,000 as indemnity. When Del Rosario died in a boating accident, the heirs filed a claim and Equitable paid them 1,000 because 1,000 is in the policy, stated in the policy, uh, 1,000 to 3,000. The heir filed a complaint for recovery of the balance of 2,000, claiming that the insurer should pay him 3,000 as stated in the policy. So the issue is, one, the heir is entitled to recover the 3,000. So the held is yes. Generally accepted principle on, or ruling on insurance enunciate that where there is an ambiguity with respect to the terms and conditions of the policy, the same shall be resolved against the one responsible thereof. The insured has little, if any, participation in the preparation of the policy. The interpretation of the obscure stipulation in a contract should not favor the party who caused the obscurity. So in this case, the one who caused the obscurity is the insurer, and that the insured has little participation on the preparation of the policy. And so the amount of 1,000 to 3,000 is so ambiguous that it is not uh, well communicated to the insured. And so the complainant filed a case versus Equitable Insurance demanding that they should get and they should recover the full amount of 3,000 instead of just 1,000. Another case I get is the Colonel C. Castro versus the Insurance Commissioner, GR 55836, dated February 16, 1981. The facts of this case is that Castro applied for insurance on the life of his driver. On the basis of such application, Insular Life issued policy number 934943 effective July 18, 1979. So the policy owner here is Colonel Castro, and the policy insured or the insured is his driver. The policy applied for and issued was on the 20-year endowment plan for the sum of 25,000 with double indemnity in case of accidental death. So the sum of 25,000 plus in case the insured will be uh, will have accidental death, it will double the 25,000. So all in all, the insured will get the policy owner will get the 50,000 all in all. Castro paid the first quarterly premium of 309 pesos and 95 cents. About 3 months later, on October 16, 1959, the insured driver was allegedly shot to death by unknown persons. So here, the insured was being killed, and so Castro filed a claim that he should receive the benefit of 50,000 pesos because it is stated in the policy. Insular Life denied the claim on the ground that the policy was void. Insular instead refunded to Castro the premiums he had paid. So the issue here is that Castro has an insurable interest in his driver, but the held is no, or the requirement of insurable interest to support a contract of insurance is based upon consideration of public policy, which renders wager policies invalid. To sustain a contract of this character, it must appear that there is a real concern in the life of the party whose death would be the cause of substantial loss to those who are named as a beneficiary. Mere relationship of uncle and nephew, employer and employee is not sufficient to provide an insurable interest on the life of the insured. It must be shown that the destruction of the life of the insured would cause pecuniary loss to the complainant. This Castro failed to prove. So his driver is not a direct family member, and so Castro failed to prove um, insure his interest in on the loss of the death of his driver. The role and importance of insurance. First, it provides safety and security. Insurance provides financial support and reduce uncertainties in business and human life. Generates financial resources. Insurance generates funds by collecting premiums. These funds are invested in government securities and stocks. Life insurance encourages savings. Insurance does not only protect against risks and uncertainties but also provides an investment channel too. Promotes economic growth. Insurance generates significant impact on the economy by mobilizing domestic savings. Fifth is medical support. A medical insurance considered essential in managing risk in health. Anyone can be a victim of critical illness unexpectedly. Spreading of risk. Insurance facilitates spreading of risk from the insured to the insurer. Source of collecting funds. Large funds are collected by the way of premium. These funds are utilized in the industrial development of a country, which accelerates the economic growth. Right now, I am connected with Allianz PNB Life. I am an agency leader. Just a quick background, Allianz is a German multinational financial services company headquartered in Munich, Germany. Its core businesses are insurance and asset management, and here in the Philippines, it is partnered with PNB Bank. Allianz PNB Life operated in 2001. Mainly our products is the variable life insurance. It is stated here the protection and health, education, retirement, and savings and investment. And also we offer traditional insurance also. I searched this in Google, and 2018 the top life insurance companies are based on the premium income are listed below. And Sun Life is as the pioneering life insurance here in the Philippines, has the largest premium income among all of these listed life insurance. So next is Philippine AXA, Philam Life, Pro Life, BPI Philam, Manulife, Insular, PTO, Allianz, which is our company, and Manulife China Bank. Insurance here in the Philippines is protected by Anti-Money Laundering Act. The Anti-Money Laundering Council warns the public against fraudulent commercial documents being sold or traded by individuals or companies and are allegedly issued, secured, or guaranteed by the Bangko Sentral ng Pilipinas or the then Central Bank of the Philippines. If you visit the Insurance Commission website, they put the announcement, the notice to the public to inform the everyone about the non-authorized transaction of insurance per unit and HMO businesses. Some of them are listed here. The Majority Insurance Agency and Business Venture, One Life Memorial System Enterprise, Major Senior Citizen Damayan, Yun Money, and there are a lot more of fraudulent insurance practices. That's all for my report. Thank you for listening and have a good day.